So welcome to this drill session. This is Strategy 1 Guided Tuition. So let's get straight into it then. Let's roll the tapes forward and let's talk through as we go through this entire video session. Now, the market we're looking at, this is the WTI oil, and in terms of the context, or what we can see is we have got ourselves some rotations here, some 5-minute rotations. In terms of obviously the type of footprint, it's a time-based footprint, and in terms of the context that we find ourselves, well, the first key standout is the very negative delta on the day. We can see that down below, minus 5,190 at current time. So we can see quite an aggressive short positioning in the market. And we can see that really over the course of the session, we can see the sellers have dominated for pretty much the entire session. Now, very important, as we can see as per the candlestick chart, we can see price is responding to that dominant price action from the sellers. In terms of the current footprint, just a quick note here. Do note the imbalance sitting in the middle there. Again, what we do tend to see in the strategy called accumulation and distribution, absorption and auctioning, we do tend to see these imbalances whilst we are forming that sideways price response. Now, to cast your mind back in terms of the strategy, the key elements of the strategy, or the two variations at least, is this sideways type price response, but what we're ultimately looking for in essence is some form of a darker shading at the extremes, and that's kind of what we can see already. If we start on this left rotation here, note the dark extreme shading. So what in essence we are seeing there is sellers come down to that price point, and they're selling, but they're being met by a buyer that's absorbing all of the potential liquidity being sold. Okay, so at the low there we have got a buyer taking all the liquidity. The market then bounces and we go to the extreme side, and at the extreme sides we can see the same thing, darker shading. This time, however, on the top side, it's the seller that's taking all of the liquidity. Now, one thing I will say, always look, and again, a lot of the time it might just be complete noise, but always look where the heavier liquidity is being taken. So what we can see at the low extreme here, note 600 lots by 223, 561 by 556, 616 by 445, 541 by 433. So we can see quite a lot of the volume being taken at this low relative to this high. Okay, so what we're seeing on the high here, whilst there is still a pickup in volume in the darker shade, what we're seeing is we're actually seeing a lot less overall volume at the extreme, and what that's telling us is that the sellers are being more aggressive at the low here and more intentional at the low versus what the buyers are being at the high. So always interpret the total amount of volume being transacted. Now, what is very interesting and what's important to note is we do have the inside candle. So we can see this is variation number 2 of the strategy. We've got this inside candle now. It's formed inside of the previous candle. Do note what we're seeing at the extremes. Okay, 41 by 10, 0 by 30, 0 by 17. Okay, so this is telling us there is a real reluctance to initiate above this price point 16. Okay, we can see it not just once, not just twice, but now a third time buyers are not willing to initiate above price point 56.16. Okay, the same can sort of be said for the downside. We can see sellers did not want to initiate below this 56.01. Why? Because we can see only 43 contracts traded there. On 56.05, 92 by 46, and now again at the 06s, 70 by 0. So there's a real reluctance at the extreme points to be initiating. Okay, and what we're seeing at the extreme points is actually passive responsive liquidity being utilized. So yeah, we can see the buyers utilizing the sellers, and at the high we can see obviously the sellers utilizing the buying being provided. Okay, so that's where we are. That kind of brings it all into context. Now, with the strategy, so important. Okay, obviously we spoke about that signal, that clue when the market is about to break. So we're looking for that. We're looking for something that shifts, something that relatively changes, and that market kicks it up a gear. Okay. So what we're doing is we're looking now for the clue. We're looking for something that tells us that, you know, the nature of the market has shifted, and we've seen quite an aggressive change in the dynamics of the market. So that's what we're trying to keep our eye out for now, is some sort of a shift that gives us that clue. Now, keep in mind, obviously, one of those clues could be the break on either side of this, i.e. suddenly we see initiative above 16s or we see initiative below 06s. Equally, we could be looking for some seriously aggressive absorption on the extreme. So instead of the sellers taking all the buying at the high, we suddenly start to see the buyers absorbing at the high and vice versa, sellers absorbing at the low. That could be a second potential clue. A third potential clue could be a sudden shift in the price dynamics. Okay, so those are the kinds of clues we're looking out for. Now, do bear in mind, obviously, we always want to potentially go with the trend in terms of context. We've observed the trend is to the downside. We can see that with the cumulative delta. And note, we can see relatively subdued volume at the moment. Obviously, we had the 10,000 rotation, and then we had 5,000 and 3,000 rotation. So let's have a look now. Let's talk this through. So we can see markets come back down again towards that 06 area where it will not initiate below. We can see again still relatively subdued price response, no real shift in the dynamics, but this is now obviously the fourth rotation within the previous three rotations. So we can see this elastic is coiling and coiling and coiling quite aggressively, and that's the real key. Okay. Okay, so suddenly there, note a little bit of an imbalance there. Okay, I'm just going to pause that slowly. Note the imbalance, so we can see obviously markets come back down. Suddenly we've obviously seen a seller hit into the 8s and quite a thinning out of trade. Now what we want to see if this is going to follow through. Okay, this is the first time we've seen this. We've seen a little bit of a shift in the dynamic, and note straight away 122 at the 6s. Note the sellers are now becoming more intentional at that price where they would not become intentional previously. We can see 136 traded. At the same time, we can see someone buying, but what happens? We see the selling, and that's our signal right there. We could see our sellers stepping it up, becoming more intentional at those 6s, willing to be initiating at that low. We're now looking for an entry point where that seller stepped in 05, 06. We're trying to offer the 6s here, trying to get filled. We can see 3 contracts traded, and there we should be filled now. Another 50 trades at 06. Our stop simply goes above the 11s, above the rotation. Obviously, we have to protect ourselves in case this fails. But ultimately now, note where the absorption is taking place. Notice where the market's holding. Okay, it's come back up to those 6s and 7s where we saw that shift in dynamic, and the market is now holding. Okay, note the absorption from the sellers. So we can see sellers stepping it up here, holding this price point, and bang, 6s trade, 5s trade, quite a bit of volume going through now. If we look at the delta, note the delta shift. Okay, minus 550. The last time we had quite an aggressive shift in the delta was the downward rotation before settling into sideways mode. So we really can see those sellers now stepping it up, really making an initiative move here, looking for a potential distribution or continuation in the direction of the break. Okay, so this is obviously this is now the move that we are looking for, and ultimately, okay. So again, we come back up to those 6s, 7s, and we can see the market holding, and again trying out those 7s, 8s, 9s. So really testing our stop, but we've got to stick to that stop now. We can see that the sellers are happy to get hit on any kind of buying here. And again, we go 10 offered down to 9, down to 8, 7 and 6 and 5 and 4 and the market starts to pick up again where it left off. Note the delta now the most negative it's been on this rotation. We can see the delta at the bottom, also the most negative on the day, and bang, note the imbalances. Okay, lots of zeros going through, a bit of stops going through, one order stopping down. We can see the aggressive nature of the price response also shifting. Cumulative delta negative 7,400, nice big fat imbalance or low volume area, all the way from 05s down to 96s, and we can see a little bit of liquidity being provided at the low here. And again, this is normal. Okay, you're always going to find pockets of liquidity being provided. The question is how much more selling has to be done. Okay, if there's more selling to be done, we will obviously continue in the direction of the break. Now note the volume. Okay, a very, very big shift in volume. That's why it's gone dark blue in terms of the volume traded. We can also see that delta going very, very dark red. So really aggressive intent coming in from the sellers. They have taken the initiative and the break has occurred. Okay, so just to recap in terms of that entry point, okay, it wasn't as aggressive an entry point or a signal as you can get. All right, you can get far more aggressive ones. However, we were aware of it. We observed the nature and dynamic of the market. We observed the context of the market. We saw the inside candles forming, and we know it's one of our variations. We then, finally got an entry around that sevens. 5607 with a stop at 5612, good 5-tick stop. In terms of target, okay, we're still in this, right? We remain in this until the market gives us a reason to get out. Now, obviously, we can see that that low volume area and that imbalance area. So long as this holds, we will remain in the trade. We will talk about that trade strategy later on in the session. Okay, guys, hope you enjoyed that. That is then the first of our drill sessions.